Welcome back, YouTube fam. Today, we've got a hot topic on our hands that's bound to make waves in the world of finance. We're diving deep into the world of Equinor ASA, ticker symbol EQNR. Get ready for some eye-popping numbers and insights that could potentially turn this into the next viral stock pick. Alright, folks, let's kick things off with a bang. Equinor's price-to-earnings ratio over the trailing 12 months stands at a modest 4.23. But here's the kicker. The average PR over the last 5 years has been a hefty 13.67. What does this tell us? Well, we'll get to that in a moment. Now, fast forward a bit to the PR forward, and we're looking at 7.81. Interesting, right? But wait, there's more. The PG ratio, which measures the stock's value considering its growth prospects, is a super attractive 0.73. A PG below 1 often suggests that a stock might be undervalued. But hold on, it's not all about numbers. Equinor's return on equity is a jaw-dropping 47.3%, and the return on assets is a solid 16%. These are some seriously impressive profitability metrics. Speaking of profits, the earnings per share is $7.67, and the forecasted EPS growth over the next 5 years is a healthy 5.8%. But the real kicker for income-focused investors is the dividend yield, which sits at a remarkable 10.48%. And while dividends have seen a minus 1.34% growth over the last 10 years, that juicy yield is hard to ignore. Now, let's talk about margins. Equinor's operating margin is an astounding 48.4%, and the profit margin is a solid 18.7%. These margins are the stuff dreams are made of. Alright, hold on tight because this is where things get exciting. If you look at the evolution of revenue and earnings over the last 8 years, you'll notice something remarkable. Up until 2020, it was a bit of a roller coaster, but from 2020 onwards, we've seen a meteoric rise, tripling revenue and earnings to nearly $150 billion and $30 billion, respectively. And guess what? This growth is mirrored in Equinor's stock price, skyrocketing from $9 a share to $33 in just 3 years. Now, let's talk about financial health. Equinor's debt-to-equity ratio is a manageable 0.62, and its long-term debt-to-equity ratio is even lower at 0.50. This indicates a healthy balance between debt and equity. In terms of stock performance, the average return over the last 52 weeks has been minus 2.24%. But don't let that discourage you just yet. Here's the real kicker, folks. Equinor's market capitalization currently stands at a whopping $96.41 billion. But here's where it gets really exciting. Analysts are predicting an average price target of $35.50 for the next 12 months, which represents a 9.57% upside from the current price of $32.38. But hold on to your hats because, according to our calculations, the fair value of Equinor could be a staggering $46.39. That's not just above the analysts' predictions, it suggests a potential huge undervaluation. So, there you have it, folks. Equinor ASA, EQNR, is looking like a hidden gem in the stock market right now. With mind-blowing financials, explosive growth, and a potential undervaluation, this is one stock you might want to keep a close eye on. And that's a wrap for today's viral stock pick. If you found this information as exciting as we did, don't forget to hit that like button, subscribe, and share this video with your fellow investors. And remember, always do your own research before making any investment decisions. Thanks for tuning in, and we'll catch you in the next episode.